So Goldman Sachs could be the beneficiary of its own market forecast. Anyway, let's go to my buddy Charlie Gasparino. The Wall Street Journal's James Freeman is here. Conservative Review's Deneen Borelli. All right, Deneen, begin with you on this notion that tax cuts are going to be the great market and economic elixir. What do you think?
Well, just the discussion and the debate surrounding the tax cuts and tax reform has been sending the market up. You just mentioned it's been up, what, 6 times with the Dow. Right now it's over 24,000. Right? And the GDP is over 3% as well. So just a conversation about it. But it's all about the certainty with the market. Businesses will know where we stand, where the country stands when it comes to taxes, and they'll know how to plan in the future. To reinvest, to grow their business.
But how would they feel if baked into this was a feature that raises taxes?
Yeah, that's a bad idea.
That would not be a good thing to plan on.
Bad idea. And you mentioned if there's a recession, and also, what if North Korea does something that's boneheaded? That would have an effect on the economy as well.
Yeah, that's an economic term, boneheaded.
Yeah, thanks.
Thank you for that. James, your fine paper mentioned something interesting, which I hadn't thought about. This idea that in order to get the votes to be yay, I mean, they're making allowances for every member. Marco Rubio among them, this idea of a higher child tax credit. Now, he's already got it lifted from $1,000 to north of $1,600 per child. He wants to get even higher than that, $2,000. Could go still higher than that for people who don't even pay income taxes. But it's all in the name of get a yay.
Yeah, I think when you get into handouts essentially to people who don't pay taxes, you've moved it from a tax bill to something else.
I don't argue because we always sound like, oh, let them be cake and all that. They pay payroll taxes. I understand that, but what I like what the Journal was saying is then work to lower the payroll tax.
Yeah, that's an option. But the point of all this is to grow the economy and get people more jobs, higher wages.
Do you think it will do that?
It will do that on the corporate side. Cutting that corporate rate to 20% will do that. And
it might be 22%.
It should be 20. That is the real growth driver here. And you called it asinine, this idea of a trigger to raise taxes. Boneheaded, asinine, whatever economic terms we want to use. This is an issue. Finally, we have a consensus in the economic community. On the right and the left, everyone agrees it's asinine to put in automatic tax hikes. Everyone agrees, whether you're from a Keynesian perspective or more of a free market perspective. If you're in a recession, you don't want automatic tax hikes coming in. And the point is, we already have triggers. Every 2 years, the people vote and they choose a Congress.
That's your trigger.
They can change the law. If they don't think the policy is working, they can change the lawmakers if they won't change the law. So there's no need for a further trigger. All that's going to do, as Deneen said, is dent investment.
You know, we've covered markets long enough, Charlie, to know that they can be meltdowns, melt-ups. A lot of people have characterized what's going on now as a melt-up. We always like melt-ups, but the worry that I have is, and I know I'm going to sound like, oh, you know, Neil's carping again about this, has nothing to do with politics, everything to do with, is this an overreaction? I understand Goldman, other firms have said the tax cuts go into effect, all of a sudden the multiples change, this market looks for. I don't doubt that for a second. I am wondering, though, whether the run-up is too much of a run-up.
Well, I would say this. I don't think so. That doesn't mean it won't be a pullback. I've always been an advocate that if you took the corporate tax rate down to 20%.
What if it's 22?
I still don't think that's that big of a difference.
I'm sorry to badge you on that, but the reason I keep mentioning it is because that is the growing talk that extra 1 or 2% is going to pay for a lot of things to win these other senators.
I'll tell you what I believe. If it's a 22, I'm not saying the markets won't correct, because they will, and we should also point out that
that's what markets
stock traders are stupid. Just remember that, because I was an old bond guy.
What about millennial stock traders?
Yeah, but they're the worst.
They're the worst, right?
But I was taught that because I covered the bond market for many years. You know, stock traders trade off of headlines, and what we have right now, more or less, is algorithms just trading off of headlines. So just remember, this isn't like someone putting a lot of thought into this. But let's game plan this. You take the corporate tax rate down to 22%. On the top of that, you have a deregulatory agenda of the Trump administration, which I am telling you, it is a stealth tax cut. It's not obvious, but every CEO I talk to says, we do better when the government isn't looking to break our chops or put us in jail or, you know, do consent decrees. You have that, and you have the makings of a very good macroeconomic environment for companies' earnings.
So you're in the camp with other your doubts, notwithstanding about individuals and what we're doing.
That's horrible.
That's horrible.
That's a joke.
But and you're not saying just from your vantage point as a New Yorker paying all these high, right? But that the corporate thing, compensates.
Listen, I said it on Your World maybe 4 or 5 months ago.
Yes, you did.
I said this market is being driven by one thing and one thing only: getting the corporate tax rate down. It is such a huge driver of potential driver of earnings.
Yeah.
Now, then earnings do have to catch up with all this, and at some point,
will they? Well, without getting into too much of the weeds, Deneen, that Republicans have been banging on the fact this would be a big victory if they get it. But we also know from prior attacks, because you can educate me on Ronald Reagan's, the impact was a year or more after the cuts, because they take time. What if we don't feel it, or voters don't feel it in November of next year, and they feel that their net pay isn't that different? To Charlie's point, for individuals, it's not the same. And they're not going to be impressed.
I would say, look at what happened the last 8 years under former President Obama. Slow GDP, stagnant wages. So compare the 8 years to, you said a year. I mean, hopefully it won't take that long, but
and we've had
just to
better
put it in
growth
the right
in the
direction.
last year.
Yeah, but
without these.
But I think you make a good point,
That's
Neil.
right.
I mean, listen, the market is trading off of optimism, and I'm telling you, I love the corporate tax rate being at 20%. But if you look at that individual side, it is such I almost said an S show. It is so insane.
That's another.
Yeah, that's another. Yeah,
it is so insane.
Boneheaded is the most politically
Think about
correct.
what they're doing. They are cutting income taxes for people who don't really pay a lot of income tax. If you want to give the middle class a tax cut, cut the payroll tax. We've been talking about that for a long time. They are raising taxes on a lot of wealth creators and people that spend money and do a lot of stuff for this economy to pay for a corporate
But we
tax
don't know
cut.
what's going to be in the final product, because they're wheeling and dealing, right? One of the other things they've raised is that the top rate that stays at 39.6% of the House would be at 38.5% in the Senate.
Right.
And maybe they would agree to do something on the write-offs for taxes and state and local taxes. I think that's unlikely. But what do you think they're cobbling together to get everybody on board?
Well, they might end up with some state and local property tax deduction. We'll see. It's not definitely the subsidy for state and local taxes is going to come down in a big way.
Right.
Because
and for wealthy guys like Gaspo, it's gone.
Right.
It's gone.
Of course, the
so he's now
away,
downsized to the Olive Garden.
Yeah. So,
but you're getting rid of the AMT.
AMT's going away. That's all good. But
then you can go a little higher than the Olive Garden.
If I could
get the free
tads.
The tads.
Sorry, James.
Yeah,
Poor James is saying, I am never doing this show again. Go ahead, James. You were making an astute point.
No, I do care about Charlie's tax bill. I do. I care about everybody's. But I just want to emphasize the importance of not saying, oh, 20, why not 21, 22, 23? 20, you recall, was the original plan was 15.
That's right.
Ireland's at 12 and a half.
Yeah, but suppose
they went to 20. Just to finish the point, 1 second. When you count state and local taxes, 20 only gets us to mediocrity. It takes us to the world average.
Very good point.
Not with the deductions.
Yes.
Now, are you getting rid of the deductions?
We're talking about rates, Charlie.
No. On the corporate side.
If you go up from 20%, you move to worse than average.
I think they're going to go up from 20%. But James, they're going to go up from 20%.
Let's be real clear.
I agree with you, but
the average corporate tax rate right now is 27%.
You're talking about effective rate.
Effective rate.
Yes.
Okay, so what will the effective rate be if you put it to 22?
The point is, it's going up. It's going up.
And he doesn't like
20 to 22.
No. If it's at 22,
so your effective rate is still going to be 20 mid to high.
It's going to be 20.
Well, it's going to be higher
if you're
than
nominal. If you're stated.
So it's not a big deal for you if it goes up to 20.
Listen, Neil, it depends on the deductions.
I understand.
If your stated rate
Bottom line, you could live with it.
The
James, you
answer
could
is
not.
the effective rate is going to be higher than a lot of our competitors in Asia and Europe. And the point of this is to bring capital.
So, Deneen, that would mean very quickly, guys, that would mean that the bang for the buck you expect off a corporate tax cut, it might not be as big because the cut itself won't be as big.
Well, we'll have to wait and see. But I was going to say pass the popcorn because this was very entertaining.
You've got to see.
That's your version of it.
I mean, this is actually important. Right. You have to see what deductions.
If your
nominal rate is 22, and you can still take deductions.
Could you just keep arguing this in the commercial break? Because I have a show to do. All right.
I'm trying to inform your viewers.
Well, thank you. Good.